Welcome to Staff Works Explained. If you are here for the first time, please consider subscribing to this channel. Also, hit the notification bell so that whenever we upload a new video, you are notified. In this video, we'll be looking at Kenya's decision to cancel 190 billion Kenya shillings highway deal with French Consortium, and now is shifting to China. We'll look at termination of the French Consortium contract. We'll look at who was involved in this contract. We'll look at what are the repercussions and also whether Kenya benefits out of this cancellation. From media reports, we know that Kenya has formally terminated 190 billion shillings, which is equivalent to 1.3 billion euros, which is a public-private partnership PPP contract with a French-led consortium for the construction of the Nairobi, Nakuru, MauSummitHighway. This road is a critical section of the northern corridor that links Nairobi to western Kenya and the broader East African region. The government is now in the process of onboarding a Chinese contractor to undertake the project under revised PPP terms. Let's look at the termination of the French Consortium contract. And some has described this a rejection of loop-sided risk. Who was involved in this? The project was awarded in 2022 to Rift Valley Highways Consortium, which was made up of Vinci Highways, Vinci Concessions, and Meridian Infrastructure African Fund. Their mandate was to design, finance, build, operate, and maintain the highway in a 30-year PPP concession. The expected funding would come from the consortium, with the cost recovery via toll collections over an operation life period which was 30 years. Why was this contract terminated? Kenya National Highway Authority (KENHA) terminated the contract after protracted efforts to negotiate certain clauses, specifically those involving financial risk in the event of lower than expected traffic volumes. The key issue here was that the contract required the government to provide traffic revenue guarantees. If user traffic was lower than projections, the state would compensate the private consortium for this shortfall. This shifted demand risk normally borne by the private sector in sound PPPs back to taxpayers, an arrangement that Kenya deemed financially as sustainable. What are the repercussions of this action? One, we would expect that there will be a delay. The project, which was originally projected to break ground earlier, will face delays as the government transitions to a new procurement contract negotiations. There is also a legal risk. The French consortium may decide to seek legal recourse or international arbitration to claim compensation for design work, opportunity costs, as well as breach of contract. There is also investor protection issue, where terminating a major PPP may raise red flags for future infrastructure investors who would demand stronger guarantees or raise financing costs due to perceived political risk. Let's now understand the original PPP structure and also see whether there were flaws. The Nairobi-Nakuru MauSummit section is approximately 233 kilometers. It is part of the Northern Corridor, Kenya's busiest highway and the main commercial route for cargo from Mombasa Port to Uganda, Rwanda, South Sudan, and the DRC. It handles over 20,000 vehicles daily. Under the French Consortium plan, the PPP structure followed a build, operate, transfer (BOT) model. The consortium was to fully finance the construction. It was to design and build the road to a dual carriageway standard. It was to operate and maintain the road for 30 years, and it was supposed to recoup investment through tolls which are collected from the vehicles that were using this road. Toll prices were supposed to range from 800 to 6,600 per trip, depending on the vehicle class as well as route segment. While typical in road PPPs, these toll levels sparked concern. There was an issue of affordability for regular commuters, especially long-haul freight operators. There was also an issue of potential underutilization leading to underperformance in toll revenue. Most significantly, the government agreed to top up all toll revenue if traffic volumes underperformed, a revenue guarantee that essentially socialized the risk while keeping profits in private hands. Why was that a problem? In PPP theory, private investors are meant to bear market risk in exchange for potential returns. Guaranteeing revenue removes their incentives to manage demand risk efficiently and transfers the burden to taxpayers. Now Kenya is pivoting to China. What changes and what are the gains for Kenya? The government is negotiating with a Chinese contractor to take over the project, likely under modified PPP structure. Though the contractor identity has not been revealed or has not been officially disclosed, such firms may often include China Road Bridge Corporation (CRBC) or China Communication Construction Company (CCCC), both deeply involved in Kenya infrastructure landscape. The new model will reportedly place more financial and operational risk on the contractor. Unlike the French deal, the government would not be obliged to cover revenue shortfalls from the tolls. Why it matters? This shifts the risk-reward balance back to the private sector, aligning with the best practices in PPPs. By not guaranteeing toll revenues, the government shields itself from potential billions in future payout that could arise from traffic underperformance, and this protects fiscal sustainability. China funded infrastructure projects, especially those which come under engineering, procurement, and construction EPC or hybrid PPP models, often benefit from state-backed financing or concession terms. This could translate to lower capital recovery costs and more affordable toll rates for users. Despite the reset, Kenya appears determined to proceed. The president has been quoted reaffirming in December 2023 that the construction would begin in 2025 and would be implemented in two phases. The first phase was to be from Nairobi to Nakuru, and then the second phase was to be from Nakuru to MauSummit and further to Malaba near the border with Uganda. This broader vision aligns with regional integration goals and enhances the competitiveness of Kenya logistical sector. What are the broader implications in terms of redefining PPP strategy in Kenya? This cancellation and restructuring may serve as a watershed moment in how Kenya approaches large-scale PPPs. There will be greater scrutiny on risk-sharing mechanism. There will be a push toward performance-based contracting and leaning on China's infrastructure model, which tends to prioritize speed and state-level coordination over private sector guarantees. It also raises the question about regulatory preparedness, whether Kenya has the institutional depth to negotiate balanced PPPs and enforce accountability without incurring unsustainable liability. In conclusion, we can say that this is a strategic reset and not a retreat. Kenya's decision to cancel the French-led PPP deal is not a retreat from private financing, but a strategic reset to ensure that partnerships are one, sustainable, equitable, as well as fiscally responsible. While short-term challenges such as project delays and possible legal claims may arise, the long-term benefits in the new structure is implemented. If this is implemented prudently, include better risk management, improved value for taxpayers, and ultimately a more accessible and reliable road network will be achieved. So thank you for reaching this far. If it's your first time here, please consider subscribing to this channel. Also hit the notification bell so that whenever you upload a new video, you are notified. Also, you can give us your thought about this reset or change or cancellation of this deal. Thank you.